Hi, and welcome back. The next thing we're going to talk a little bit about here are some of the government programs to assist those who are in trouble. We're going to talk a little bit about these. There are a lot of details to these, but generally speaking, you would qualify for one of these government programs if your loan is owned or guaranteed by Fannie Mae or Freddie Mac. Um, there are also many lenders have voluntary programs, or they are voluntarily cooperating with these government programs, or they have their own programs to help you either modify your program, or your loan, or to refinance out of it. But the first thing we're going to talk about is the HAMP program, the Home Affordability Modification Program. Now, the goal of HAMP is to modify your payment, your monthly payment, principal, interest, taxes, insurance, and condo or HOA fees, to be less than 31% of your net income. Now, there's about 60 pages of details on just this one program, so you really need to go to this makinghomeaffordable.gov and read some of the fine print on it. But generally speaking, though, if you are an owner occupant, you must live in the property that you want to modify the loan on. It needs to be for a 1 to 4 family home, which would be a conforming loan product. You need to have a monthly payment that exceeds 31% of your income. Otherwise, there's nothing to modify it to. And you need to own or owe an amount that's less than $729,000. Not difficult to do. There are a lot of details in this program, so you really want to go and check it out for yourself. But basically, though, I mean, if you want to stay in your home and you qualify for a loan modification, by all means, go do it. There's a lot of details to them, and there are some things to be careful of. But generally speaking, though, it's a good deal. So what the program entails is the first thing they will do to try and make your monthly payment affordable by you is they will reduce the interest rate. They'll take your 7% loan and turn it into a 2% loan, and calculate your payments and see if that gets you down below that 31% threshold. Then they will take, if that doesn't work, they will take and extend out your payment plan. They will take a 30-year loan and turn it into a 40-year loan. See if that gets you down below that 31% threshold. The next thing they'll do is they will perhaps add a principal payment to the end of the loan, the end of the life of the loan. So you get to the end of a 30-year loan, you've made 30 years of monthly payments, every month, equal monthly payments. But at the end of 30 years, you'll still owe them some principal on that. Very rarely do they actually forgive principal on any one of these modifications. So just kind of keep that in mind. But again, though, if you want to stay there, a HAMP modification is a good thing. The only thing that I would say to be careful of in requesting a HAMP modification is as it pertains to our next thing, which is a HARP refinance, is that you can apply for a HAMP modification if you have a reasonably foreseeable probability of a default in your future. So if you see yourself as living on borrowed time, so to speak, you lost your job and you're slowly eating away at capital or savings that you have, and that you're going to default. It's only a matter of time. You can apply for one of these programs. But interestingly enough, though, many times if you have too much cash in the bank, you don't qualify. But anyways, since you can apply for them without actually being in default, I've heard rumors that if you do this, if you apply for a HAMP modification, you may disqualify yourself from our next thing, which is a HARP refinance. Now, the HARP refinance is a program available to people who are not behind. Basically, if you're current, right? And the only reason why you can't refinance and take advantage of, the historically low rates right now, and I'm not talking about 2% money, but I'm talking about going from a 7% to a 4.5%. If that's what the market will bear for your particular debt scenario. and you're unable to do that, then this HARP program will assist you, and you have to have a Fannie or Freddie loan once again. But also, to be eligible for a HARP, some of the same things as a HAMP. Has to be a 1 to 4 unit home. Has to be your primary residence. You must be current on your mortgage, and not have been more than 30 days late making a payment within the last 12 months. Okay. You have to have a first mortgage not exceeding 125% of the current market value of your home. If you purchased your home in the last few years, this is most likely going to disqualify you for that. You must have income sufficient to support the new mortgage payments, and you can improve the long-term affordability or stability of your home, the refinance. Keep in mind that HARP does not reduce the principal amount, it's a refinance product. It's for people who should be able to refinance into a fixed rate or a low rate, but they can't because the value of the collateral has gone down. And if it hasn't gone down by too much, then you will qualify for one of these loans.